we are around that 21,900 zone on Nifty, and that has been a critical support for the index in that in the past 4 sessions. And incidentally, that also coincides with your 50-day moving average. I mean, as I mentioned, I mean, we are back in that zone, 21,900 odd mark. What's your view now? I mean, is that a zone where we'll consolidate, because of 22,120 has been a key hurdle on the upside. So the market has been pretty much consolidating in that 200-point range. What's your view?
Good morning, Suyash. So yeah, so as you rightly said, we are at the 50-day moving average, which is almost close to 21,900 mark. So my concern is more of the weekly chart, because in the previous week there was a sell-off in the market. The market was down by almost 2% on the Nifty index, and the way the candlestick pattern has emerged in the last week is not that strong. It's a bearish pattern, and with the selling volumes. So I'm little bit concerned at this point of time, because I believe if we see a close below 21,900 mark, then a little bit of more correction. Like eventually the last week there was a 450 odd points of correction was there in the last week. So may not be a 450 points, but definitely 200, 250 points kind of a correction from 21,900 level. So that is what my view is for the market. On the way up, 22,200 looks the immediate resistance. There is a lot of call writers who are extremely active at 22,200. So 22,200 is going to act as resistance at least for the next couple of days. And on the way down, if 21,900 is broken, I need a confirmation, so that if we see a close, so I believe another 200 to 50 odd points corrections can be there. Charts are looking weak. There's a distribution in the weekly time frame. So I have a cautious view on the market.
All right, cautious view on headliners. I mean, if we break below that crucial support that we just put out there, another 200, 250 point fall could be in the offing. And while we have all been talking about the broader markets, the headliners, they have got all the attention. Nifty Bank, Brijesh, I mean, over the last 7-8 sessions, it has been making lower lows, lower highs on the price charts, which of course is a bearish signal. I mean, so far the index has defended the 40 DMA, which is around that 46,350 mark, if I'm not mistaken. But 46,700, 800 is where, time and again we have hit that brick wall. What's the verdict on Bank Nifty? I mean, can we finally take out 47,000 on the upside by tomorrow's expiry?
To be very frank, 47,000, there is a lot of call writing, and the way the Bank Nifty is corrected. One good part for the Bank Nifty is, like, for the last 8 trading session, the Bank Nifty is corrected, and the intraday charts are in the oversold zone. So only because of this, there can be a slight bounce, if you don't break 21,900 and the Bank Nifty sees some bounce, there can be slight intraday bounce is possible, but then 47,500 looks quite I'm not too comfortable, or maybe right now I don't believe 47,500 might be there. 47 itself looks like a resistance zone for the Bank Nifty at this point of time. Bank Nifty, I believe it will be more of a range bound, will not break the low. 46,000 may act as a support, but then having said this, 47,000 is likely to act as a very major hurdle. By any chance, even 47,000 is taken out, 47,500 is the next resistance zone. It's more of a sideways trend is what I believe. So expiry may be somewhere close to 47,000. I don't believe it will cross 47,000 on the higher side.
Good morning, Brijesh. Now, I'll drive your attention to TCS, and Tata Sons has been in the news that they are offering to sell off 2.34 crore shares of TCS, which will dilute their equity by 0.65%. They hold over 72% of equity in TCS. The shares will be sold at a floor price of 4,001. TCS stock yesterday closed at around 4,114. Right now it is at 4,047. But looking at the returns TCS given over the last 1 month or the last 5 days or even today, it's all been in the negative. Do you see investors' sentiment going negative because of this news, because of the price is lower, almost 3.6% lower than the current price it was yesterday?
Yes, I do believe there is a sentimental damage in TCS. So, 4,000 is the mark where the TCS has seen a multiple demand zone. And I sense that looking at the chart pattern, it looks like that 4,000 mark will be broken. And nothing much of a downside. 3,800 to 3,900 is again the demand zone. So, I believe whenever it comes close to 3,800 mark, 50 points plus and minus, I think long-term investors can re-enter their long positions. Maybe from the immediate point of view, it looks slightly bearish, maybe because of the news. And today there is a gap down opening. So basically, whenever there is a gap down, there is a follow-through selling do come. Maybe tomorrow there can be some breather, and but then eventually there can be a little bit further selling in the TCS particularly. TCS might come somewhere close to 3,800, but I believe this level should be viewed as a buying opportunity. Long-term perspectives remain quite a positive. Our fundamental analysts believe that this news will not impact the long-term story, and it is just a this is just to avoid the IPO thing what they are doing. So I think slightly little bit more pressure to 3,800. One should re-enter the long positions.
All right, that's the view on TCS. Another stock we wanted to pick your brains on is Shree Cement. I mean, it has been struggling for some time now. The stock has corrected by about 20% from its 52-week high. And, Brijesh, till yesterday, the stock was in this downward sloping channel. I mean, this latest up move, first of all, began on Thursday. I mean, Citi also gave a buy call on the stock. But yesterday, I mean, we saw very good volume, volumes in the cash segment. And then, of course, there was this breakout that I just mentioned earlier from that downward sloping pattern. Is that a stock to look at? Is that, looking attractive, Shree Cements?
Street cement has been correcting largely from the month of from the start of the Feb. I think street cement is correcting, and now
You're
only
right.
because the stock has corrected so much, it has come to the oversold zone, and it's just seeing a bounce as of now. I would take a long position only when the means directional long position only when the 200 day moving average is taken out, and the value for the 200 day moving average is 25,900 mark. So this pullback can move toward 25,900 mark, but only a sustainable move. We need to check fundamentally whether is a value buy or not. But technically, if I need to take an entry, it would be only a buy about 26,000 level. So right now we can see a move which is another 1,000 points from this level. This can be a trading opportunity, but confirmation for the positional bet should be done only when it crosses 26,000 on the weekly closing basis.
Trading opportunity at across 46,000. But Brijesh, what are your picks for our investors today?
Yeah, so I believe there I selected the mid cap space. Basically, Sula Wynad is something which is looking positive. I think, irrespective of the market, this would be a stock specific move. One can go long at the current price with a stop loss of 506 for the target of 620. So this is again the positional bet, 15% kind of a reward is what I'm looking at. It will take a good amount of time. 15-20 days should be the time frame for this particular call. Same with the Ganesh housing. Current price, one can take the buy idea with the stop loss of 673 for the target of 810. So again, this is a positional bet. And in the last couple of days, like eventually the Tata Motors, after the news, the Tata Motor was correcting, and I think the Tata Motors have come to the demand zone. So there is a trading opportunity, trading bet for the next 3-4 days in Tata Motors. We can go long at current price, the stop loss of 958. I think Tata Motors will go back to 1,020 to 25 level. So there's a trading opportunity in Tata Motors.